Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment is Joe Tigay, Managing Partner at Equity Armor Investments, for an update on Nasdaq-100 performance and volatility trends that he's seen in the market, as well as some 2022 outlook. Joe, it's great to see you. Welcome back to Trade Talks.
Thank you for having me.
All right, and you know that Santa rally into the end of the year was a little bit bumpy, starting after the first Friday after Thanksgiving. What were your thoughts around the volatility that we saw, not just with the Nasdaq-100, but the market in general?
Yeah, we saw some volatility. Of course, the Fed came out and was a little bit hawkish. They were talking about inflation not being transitory anymore. And then, of course, the market got hit with the new variant, Omicron news, and which has spread like wildfire across the world. So got a couple of things going on, and the market started to see some volatility. And it was really interesting. At the start of December, the Nasdaq made a new relative low, and Vol-Q made a relative high at 2882, and then just last Friday, the Nasdaq made a new low, lower than the December 3rd low, but Vol-Q was nowhere near as high. It was only 2482. So what I think was going on, the market had seen some of the Omicron, seen some of the COVID news before. We're a little more comfortable with it now. We know what to expect going forward. It doesn't seem like the market's expecting any shutdown, so maybe the economy can weather through this latest variant, and the recovery will still be on course for 2022.
Yeah, well, I mean, it kind of makes sense. We didn't have vaccinations and understanding of it. We did like last winter, as we do now. So perhaps we are learning to live with this. But I think outside of Omicron and other potential COVID variants, really what's happening with the flood and the inflation is going to be a big driver. We're looking at tapering. We're looking at potential rate hikes. So what are your thoughts around that, with some liquidity coming out of the system, and what that means for volatility as you look into 2022?
Yeah, volatility has gone lighter as soon as the Fed started talking about tapering, and I expect that to be the case as they tighten, as the tapering happens. So there'll be a little less liquidity, a little more volatility, and that will be the norm for 2022 as the Fed's trying to cool off this economy. Now, the Fed has said specifically that the inflation is no longer transitory; it's here, and they have to act to cool it off. Now, the one thing that worries me, although I don't necessarily think it's going to happen, but for the first 6 months of the year, the Fed does not have a lot of tools left to, if the economy were to slow down, to speed it back up, because there is inflation. That is first and foremost for them. They have to cool that off. So if there is an economic slowdown, the Fed won't be there to act. And the Fed being there to act is really what has characterized the market ever since the Great Recession. The Fed has been very accommodative. There's been the Bernanke put, there's been the Yellen put, now there's the Powell put. The Fed has been there every time the economy started to hint at slowing down. That might not be there at the start of the year, and so that's just a little bit of volatility event on my radar, just in case. So it's something that's keeping me up at night, but I'm always hedged, so it feels better that way.
Well, and that's a great point that you bring up. So let's wrap up and talk about EA Vol and how investors can use that within their portfolio. Let's say if they do have a big basket of growth stocks, many of those Nasdaq-100 names, a lot of those technology names.
Yeah, so just EA Vol's volatility hedged portfolio. It allows me to stay invested in the market in those names in the Nasdaq-100, which I love. I think it's got a great future there. But of course, it has that protection to the downside, allows me to utilize the volatility when it happens, like at the start of the month, last Friday, to take some volatility off, put it back into stocks which are lower. And for me, that's the best way to own volatility, have it actively managed, allowing yourself a natural buy low opportunity when stocks go down.
All right, Joe, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.